What does this week have in store for Tesla? Where is Tesla stock going? Where does it sit valuation-wise? How does that compare to Amazon? What catalyst do we have this week? A lot to talk about. Let's get started right away. First, this is CPI and, I hate to say it, Fed week. Yeah, you've got Jay Powell talking on July 9th and 10th in his semi-annual report to Congress. We'll be covering the Tuesday event, maybe Wednesday, depends how we feel, at 7 a.m. on the Market Live channel. So if you're not subscribed there yet, just type into YouTube, Meet Kevin Market Live. I'm live there every morning at 5:25. Thereabouts, when the market is open and we talk about the market and trading or whatever. So you're welcome to join there. It's totally free. And so we'll cover that semi-annual report from Jay Powell at least on Tuesday, maybe also Wednesday, though usually Wednesday it's like the same stuff just said again. Jay Powell could be a hit to potentially what happens with interest rate sensitive stocks, though I just want to say I don't think so. On July 2nd, we had Chair Jay Powell, give a discussion with Sarah Eisen at the ECB forum on central banking with Sarah Eisen. Did I just say her name twice? And nothing happened. It was a large nothing burger. So I wouldn't really worry so much about Jay Powell. I really don't think we're going to get anything really interesting out of the Federal Reserve that'll shake people in their boots. At the very least until July 31st. By July 31st, we'll actually have more data. We'll have another CPI report. We'll have another PPI report. We'll have another PCE report. We'll have a lot more data. And with that data, I think the Federal Reserve will begin to steer, do we think a rate cut could be coming in September? Is a rate cut on the table in September or not? The beginning of rate cuts obviously being heavily associated with Tesla because Tesla is an interest rate sensitive stock. So as rates go down, more people buy the vehicles. This is why when we had a Model Y promotion and you could get a Tesla Model Y for, 1.99%, these things flew off the shelf in Q2. However, production slowed down, so Tesla right now doesn't offer these lower interest rates. We'll fact check that quickly as we film this video live right now. Tesla isn't offering those sort of rates right now, presumably because they need production to catch up. So many people picked up their Teslas, and they didn't produce as many. They gotta pick up production again. So in other words, I think in Q3, you'll actually end up seeing a little bit of a hit to cash flow, whereas in Q2, you can have a really glorious Q2 earnings report, which comes out on July 23rd. So I'm pretty optimistic about the earnings report. Yeah, looking at their website, no interest rate offers right now, still 6.29 for a Model Y. Not too terribly much of a surprise, though. So the catalysts that we have this week, though, do include CPI and PPI. CPI is expected to come in at 0.1 month over month, core at 0.2. Morgan Stanley thinks it'll come in a little higher at 0.27, but won't really matter because these numbers are so low. CPI year over year, 3.1, 3.4 for core year over year. Look, the markets aren't even really trading inflation anymore. I've noticed maybe about the last 2 months, April and May, of inflation data that have come out, markets didn't really move much at all. It's sort of almost like we looked at the multivariate core inflation read, and we saw that inflation was really just a blip in 2024. That sort of January, February rise inflation has already been well offset to the downside. If you want to see that visually, take a look on screen now. You can see here we had this nice downtrend of inflation in 2022, 2023. You get that jump right here at the beginning of 24, which Jay Powell said, hey, the first quarter we think will just, be a little warm and it'll be down from there. Well, he wasn't wrong. So far, it's down from there, and it's lower than where it was previously on the multivariate core trend. And keep in mind, a lot of the sectors of inflation that are still hot are your typical car insurance, health insurance, and rental housing sectors, all of those massively lagging indicators for inflation. So really, the inflation story is actually a good thing for Tesla. Rate cuts coming are a good thing for Tesla, though I honestly, I don't think that, a 1/4 to 0.5% rate cut is going to make much of a difference for affordability. We do have 2 full rate cuts priced in for this year, with the first cut fully priced in November and about an 82% chance of getting a cut in September. So then we do have PCE this month, actually this week as well. Sorry, not PCE, PPI. PPI is expected to come in pretty nominally, 0.1 on the month-over-month, 0.2, year-over-year 2.3, and 2.5 on year-over-year core. Both of those last two numbers there are slightly higher than the previous month, but a lot of analysts on Wall Street saying the numbers of last month are expected to be lower than this month, and that's okay. They're already anticipating that a little bit of a higher read this month will be okay, as you don't see as much of a flow through from a drop in airline pricing and used vehicle pricing. Whatever. Point is, the market is basically saying, we think inflation will come in low, but we're also already aware that if it comes in a little higher, we're already comfortable with that. So I'm really not seeing a negative inflationary catalyst this week for Tesla. If anything, these should all be tailwinds for Tesla stock this week. And I don't think the Federal Reserve will be much of a big hoo-ha at all. Now, as far as Tesla on a volatility scale, look, we called the bottom of the Tesla volatility, and we suggested that Tesla stock would generally rise on average about 1.9% per day in the days following a volatility bottom. We made that video, I think it was Tesla stock's about to explode. I don't know, we made a bunch of videos on it. And we started with the course member live stream, which we've briefly extended the sale on that. Just there's a lot going on with people on holiday or whatever. We're going to push this into next week. So if you want to join the courses on building your wealth, link down below, meetkevin.com. Email us at staff@meetkevin.com if you have bundle up questions. But the bottom of volatility was June 7th. And we saw that volatility move pretty rapidly, essentially within the last couple weeks here as pricing has moved up. Right now, volatility for Tesla is actually somewhat mid-range. So you're roughly in line with the 30-day average volatility. We still haven't seen the massive spike of volatility you would expect to get following such a low. I do think we're going to end up getting that spike, and it could come with earnings, because I actually think these earnings will be pretty good. I generally don't like playing earnings, but the going forward period here in terms of excitement for Tesla is all about hype around 8.8. People keep sending me messages like, Kevin, what do you think about the ex-CEO of Uber potentially being hired and that being announced on the robotaxi event? It's literally every single time there's a Tesla event, people are like, oh my gosh, but Kevin, what do you think? What if they do this? And whether they do or don't, the stock just goes down after. Buy the rumor, sell the news move. So I just want to set expectations that I do think the hype cycle is just getting started for Tesla. We'll talk valuation in just a moment. And I actually think that July 23rd's earnings will accelerate that hype cycle. Because, see, what you're going to get on July 23rd is not delivery numbers, because we already know that. It's not margins, because of course we're going to get those, but we don't actually think those will be bad. It's not going to be cash flow, because we don't expect that to be bad. Like, these things should all be good. It's actually going to be hype from Elon. Elon is going to hype the crap out of the 8.8 event. Come on, baby. This is the time to do it. It's the, even if they're just subtle little hints and teases as to what might happen, he is going to hype 8.8. So really, I think, while it's possible Tesla stock keeps moving over this next week, mostly what I think on, no news from JPOW and good inflation data, and just sort of in line with the trend that we tend to see with Tesla, it's possible that you take a little bit of a breather on the stock price. But once you get to July 23rd, I think between July 23rd and 8.8, the stock probably goes up substantially. So I don't know that you necessarily want to be out of Tesla stock between now and then, and here's why. I don't think 8.8 is mainstream yet. I don't think most people on Wall Street or Main Street are really aware that there's this big, robotaxi event coming. I think that realization will hit, frankly, in the week before. So after Elon hypes it on earnings, and then sort of the week to 2 weeks before the event, that's when you could really potentially get to sort of peak euphoria. Now, when it comes to valuations, get a little on the stretchy side. You're sitting at right now about a 102.24 PE ratio. That's using $1.26 of projected earnings per share. which is pretty low. That's hold on, let me make sure I have that right, because that seems a little off. Let's see here. We've got, and then we're gonna do a PEG ratio analysis on this. Sorry, it's $2.46 of projected EPS for Tesla, which if I take $2.46 and I divide it by 250 or 251 divided by $2.46, yeah, I get to a 102 PE ratio. So the 102 is right. So your 102 is the PE ratio with $2.46 of projected EPS for year end. And then you've got a 32.6% projected growth in that earnings level for each of the next 4 years on average. That's how I like to calculate my PEGs. I don't like to use the growth rate of the last year. I like to use the 4 years ahead. And if I divide that in, I get to a PEG ratio of about 3.16. It's pretty high. Typical manufacturer would probably be around 1.67, but it's not some of the craziest figures we've seen for Tesla. And that's actually why I think you're going to just now start, frankly, leading up to the robotaxi event, a period of euphoria. In other words, I think the stock's just going to go straight up. I'm going to explain why. Let's look at Tesla's PE and PEG and all that good stuff the last time it hit all-time highs. So we're going to go all the way back here on the good old Weeble and take a look here. This right here is our all-time high figure, right? $414. Man, those were the days, huh? Anyway, that was pretty dang high, and that was November 4th-ish of 2021. Pretty dang crazy, right? And then take a look over here. Oh, this is just a meetkevin.com/mastermind, in-person, small groups, high net worth connections. Oh yeah, we're doing a mastermind now. If you want to learn more about it, go to meetkevin.com/mastermind. We'll get you on a call with our team. And if you're interested in this, this is super, super high-end, and a lot of folks have been really interested in that. It's been actually incredible how many folks have been interested in it. But it's fine. We got a plane. I can fly around. I can do these. It's going to be very, very exciting. I think it's going to be extremely helpful for a lot of people. So check that out, meetkevin.com/mastermind. Okay, so 414 was our top at the end of 2021. Our year-end 2021 EPS was $1.62. So 414, rounding there a little bit, divided by $1.62 put us at 255 times price to earnings. That shows you the euphoria of Tesla at that given time. And now the growth rate for the next 4 years, you ready for that? 125%, that's more than a double. Then negative 29%, negative 35.39%, negative 5.2%. Hence, 3-year downtrend in the stock. 3 years of negative earnings growth. What a surprise. So actually, over those 4 years, you only had average growth of about 55.4% per year. So now you take that 255 PE ratio and you divide it by this 55% growth rate, you are actually trading, I get a tire when I do 255 divided by 55, I get a tire. There we go. You actually get a PEG ratio of 4.63. Okay, so a PEG ratio of 4.63 at the top. Holy smokes. That compares to where we sit now at just 3.16. Okay, you ready for some crazy math? So in order to reverse what Tesla's price would be at peak euphoria by the robotaxi event, watch this. This is crazy. We're going to take previous peak euphoria of 4.63 as a PEG ratio, and then we're going to set that equal to the PE ratio divided by growth. That's just the formula for PEG, right? The right side is what the PEG was then. Left side is the formula for PEG, okay? We know growth today, going forward for 4 years, is 32.6. Okay, fine. So to clean this formula up, we're just going to go to the right side here and multiply by 32.6. Go ahead and get rid of that. And then I have a fraction over here of x over 2.46. So we'll just multiply by 2.46. Oh, look what we get to. X equals a very simple equation because we now go, oops, there we go. Price, which is X, equals 4.63 times 32.6 times 2.46, which is, hallelujah, $371. That, my friends, is peak euphoria. It is a highly unsustainable number. That valuation is ridiculous and it's stupid. It should not be trading for that in the near term. In the long term, it can grow into that sort of valuation. What kind of valuation is fair and reasonable today? This, my friends, this is exactly the same spreadsheet that I last modified in my Tesla is about to explode video before it exploded. In fact, if you go to the bottom of it, you'll see right here, I write present value of Tesla stock, $180. So we did this analysis when the stock was $180. And I said, look, I think it's very reasonable for the stock to start pricing in 2.5 million vehicles to maybe 3 million vehicles by the end of 2026. And as we know, the stock market likes to price in the next 18 months ahead. Oh my gosh, that's the end of 2026. And look at what our fundamental analysis said. Oh my gosh, the absolute lowest end would be 189, which suggested we were essentially at the bottom. But the more reasonable figures were between 227 to 275. And that's only based on a 1.67 PEG ratio at 32.5% growth, which is roughly where we sit. So the price of Tesla stock just went from below reasonable to reasonable. But now that it has gone on that trajectory and we're about to go into the 8.8 hype cycle, we have a real shot of going into true euphoria. And while at the same time, you have companies like Nvidia going through a cycle of euphoria. The Qs are at all-time freaking highs. And we're pricing in the future of rate cuts coming in here. I think it's pretty reasonable to assume this stock is about to get carried away with a substantially excessive valuation, which, don't get me wrong, that's wonderful. And I want to hold it because right here, this is the spot where I think you buy it, you're paying a reasonable price for Tesla, roughly right now. And I understand we're pre-pricing in 18 months out, right? Because we mentioned earlier that, hey, the current PEG is about 3.16. It's a little expensive right now. But again, we're pre-pricing in the end of 2026 because at the end of 2026, we think EPS will be about $4.58. Okay, let's write that down. So we go current pricing, $2.51 divided by $4.58 puts us at about a 54.8 on the PE ratio. Divide that by about a 1.67 PEG. There you go, 32.5% growth. So the math lines up that what you're paying today is basically pricing in the end of 2026. Very reasonable for stocks to do that, and I don't think it's horribly unusual. It's possibly a little bit stretchy already because you're not really, what are you going to grow into in the next 18 months? Fine. As far as, though, this next month and 2 days for Tesla stock, I think you could get to a period of absolute peak euphoria. And now I want you to see the technicals. The downside support for Tesla is $231. That's your 2.5-year downtrend. $231. That's this orange line right here. The next stop, which I suspect we're going to test this week, is actually right here at $258. I think this is a critical point for Tesla, and I actually don't think it's that hard of a point for Tesla to test. I think 258 will get blown by. I don't see this as much of an issue at all. Volume, while it did slow on Thursday and Friday, well, I guess that'd be Wednesday and Friday, it's still almost double the volume that we've seen before this run really started, which this run hasn't been going for that long. It's only been, 8 days now. So I think breaking 258 is easy mode. This is, we might hit 258, get a little bit of a rejection, clear the order book, boom, you're above it. We already did the hard one. Clearing the 250 order book is hard. I think an easy price target easy price target between now and Robotaxi Day, $295. Now, do I think we will actually make it to 371, which would be sort of like your peak euphoria level? I don't know. Things would have to just be perfect, and the momentum and the story would just have to be so juicy. It's possible, but between now and October 8th, I would say 295 to 371, anywhere in between there. That's what I'm looking at. And so I do think that with volatility still priced mid-range, you're not paying an unreasonable valuation for options. I think you have a safety net that is about 10% below you, that 231 level. But the upside, this is what we call an asymmetric bet, right? The upside, let's do 371 minus 295, $76. Divided by 2. I'm trying to get the midpoint here between these two. So let's divide that by 2. We got 38. So 371 minus 38, 333. So that would be the average upside, my take. 333 divided by 251. That's an upside of 32%. So you have a 3-to-1 upside bet here between now and Robotaxi Day. My take. Now, is it possible that something crazy like the Model 2 or whatever is announced at the Robotaxi event? Yeah, sure. Is it likely? No. But anyway, that's my take. So if you want to learn more from my perspective on entrepreneurship, business, investing, real estate, building your wealth, go to meetkevin.com. If you really want in-person insights, make sure to go to meetkevin.com/mastermind, book a call with the team. And if you just want to be a course member, get my trade alerts for, when I'm finding low volatility reads or the financial and fundamental analysis that I'm doing. You want to hear about that first in the course member live streams. Join any of the courses on building your wealth at meetkevin.com. You get lifetime access, you pay once, and you get to watch me analyze companies every day. We talk technical analysis, fundamental analysis, real estate, Q&A, you name it. So see you there very soon. Thank you so much for being here, and goodbye. Now for those of you that made it this far quickly on Amazon, Amazon's valuation is only a 178 peg, which frankly for a manufacturer, that'd be pretty good. 167 being your typical average, but there's so much more than that. I mean, you've got ads, data centers, you name it. The production studios. This is a pretty incredible company. They get a pretty fair valuation, so I'm pretty long Amazon right now. Pretty excited about them. Anyway, thank you so much for watching. See you soon.
Not advertise these things that you told us here. I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, licensed real estate broker, and becoming a stockbroker, this video is not personalized advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show shall not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purposes of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services we may benefit from. I also personally operate an actively managed ETF. I may personally hold or otherwise hold long or short positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuer other than HouseHack, nor am I presently acting as a market maker. Make sure if you're considering investing in HouseHack to always read the PPM at househack.com.